Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. They always have been, but it's been increasing over the last 50 years since the Vietnam War. The government has been getting bigger. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto. This is your weekly morning show where we bring you the latest in everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about the major correction that took place on Bitcoin just a few minutes ago. As you know, Bitcoin over the last week rallied up to the critical level of resistance at $94,000. And unfortunately for the bulls, Bitcoin rejected flat off of it. Today, we're going to be talking about where Bitcoin is likely to be going from here. We're going to be drawing some similarities to the 2019 rally that sent Bitcoin up to $13,700. And we're also going to be talking about why I believe, just make sure that we're good on audio, we're also going to be talking about why I believe that we are going into a shorter bear market than we have in the past, but we are nevertheless moving into a bear market. And we're going to talk about all of that and more on today's episode of Coffee and Crypto Live. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel, and stay tuned for more content. I appreciate all of you being patient with me. We have quite a few different possible things that could be going on with my wife's health. She feels like she just feels awful. Just feels awful. All kinds of symptoms. She's dizzy. She feels like she can't stand. It's really just it's really not a great situation. We are trying to figure out what's going on. We've had a lot of different scans done. We need to get some more imaging done. And at the end of the day, we're going to try and figure out what's going on. I'm going to do my best to take care of her, provide for her, protect her, and that's where I've been. But I am back now, and I'm really looking forward to being here. So without much further ado, let's get started. Crypto Chap in chat. Alan Ricard is in chat. Hypermix Big Biz is in chat. Let's see. Arthur Longsworth is in chat. Trey Trump is in chat. It's Remy No Limit said, "Yo, Jeb! Good to see you." Blockchain Biker is in chat. Medicare Latino. Hola, ¿cómo está? Buenos días, Bitcoin amigo. ¿Cómo está? Sí, buenos días. Crypto Surgeon chat said, "Good morning, Jeb. Nice to see you on Monday." I know, all right. You Learn said, "And it's gone." South Park. Yes, exactly. And rally's gone. Where'd it go? That's what we're here to talk about. Christopher Ryan said, "Crypto fam, remember financial sovereignty for the win every time, like sub." Exactly. Sounds like POTS. Please research it for your wife. We've already figured out that she has POTS like 2 months ago. Guys, I spend probably like 8 hours a day doing research on what's going on with her health. And that is genuinely not an exaggeration. I'm sitting there with primary resources, medical journals, Grok, her own lab work in the past, imaging, all of that, trying to figure out what's going on. Right now, there is concern, and I said this on X, so this isn't something that is a new announcement. There is a concern that my wife might have multiple sclerosis. So, sorry, my voice cracked a little bit when I said that. So we're working on getting her a full central nervous system MRI to either meet or not meet the McDonald criteria. Hopefully we don't meet that criteria, which would mean that she does not have multiple sclerosis. But if she does, she needs to know as soon as possible so she can begin treatment. So we're working on getting that done. We did just rule out her having the same heart condition that our son had, so that's a blessing, but we still don't know what's going on. So please pray for us to have answers. She would definitely feel much better if we knew what was going on and why she felt the way she does. But yeah, really appreciate you guys being here. One last thing I'll say before we get started is that what we are walking through right now in our personal life is exactly why financial sovereignty is so important. I would not have the freedom to be as supportive to her as I have been if I had not spent the last 8 years putting our family into a financially sovereign position. This is why I teach you guys how important it is. This is why I talk to the men and I say, men, it is your job to protect your wives. It is your job to provide for them because you never know what's going to happen. One day, maybe I need help and she'll support me, but we need to make sure that we have financial resources to do that, and we do. Thank God. And so praise God that we have made a lot of good choices financially so that we have the ability to take time off and focus on this because this is what's most important. So anyway, Enough of that said. It's not what you're here for. Let's get started. Bitcoin is currently going through a major correction, and thank you so much for all of the prayers and everything in chat. You guys are absolutely awesome. Let's get started. Since it's been about a week, I'm going to go ahead and just hit this magical little delete button over here. We're going to turn off the central bank balance sheet for just a second, the moving averages, and we're going to start with a clean chart. You know, one thing that I really enjoy doing with technical analysis is starting with a clean chart. And the reason that I do is because it helps us to get a fresh perspective. It helps us to get a fresh perspective on things. And so we have to go back to what the definition of technical analysis is. The definition of technical analysis is a systematic approach to scientifically studying the history of a certain market, whatever that market may be. And so that market that we're talking about right now is Bitcoin. We are doing what we can to figure out what Bitcoin is doing right now and where Bitcoin is going next. And so we use our historical analysis to gather a better picture of where Bitcoin is. We see if there are any different ways that we can compare the current price action to previous price action so that we have more of an understanding about where Bitcoin is going next. And so this is why I like to use a clean chart, because you can really just look at the actual price and you can get a good feel for what's going on. So let's go ahead and see if Coinbase will cooperate with me. For some reason, Coinbase definitely goes back farther than this. I'm not really sure why the Coinbase... Does anybody know? Like, why is the Coinbase Bitcoin chart only going back to April of 2018? Coinbase was founded in, I think, 2013. What? Why? Why is my chart not going back as far as I need? Let's see. Maybe we can use Bitstamp. Yeah, Bitstamp's got a nice long chart. Here we go. All right. Now, if we want to understand what Bitcoin's about to do, we want to find a model that reminds us of what Bitcoin has done in the past. Take a second, look at this chart, and tell me if there is any historical market on Bitcoin that you think this current market is most similar to. I'll just go ahead and leave it here for a second. You can pause the stream if you want. What period in Bitcoin's history do you think, and this is subjective, but what period in Bitcoin's history do you think our current market is most similar to? I believe, and a lot of other very skilled market technicians in the Bitcoin space believe the same thing. I believe that Bitcoin is most similar to this market right here. And there's a lot of reasons for that. In today's stream, I'm going to unpack exactly why. You might think, well, Jeb, you've done a lot of comparisons to this period in Bitcoin's history, which was basically the entire year of 2022. You basically said that 26 is going to look like 22, and then we're going into a bear market. I think that we're following a very similar market structure to that, but from a fundamental backing, from the overall market being the most similar to any other market in Bitcoin's history, I believe that our current market most resembles this market here in 2019. I'm going to explain why, and based on that explanation, I'm then going to tell you what I think we're going to do next. Okay? Drop a 1 in chat if you want to see more content about where Bitcoin's going next so that we can be prepared for it. The first thing I want to point out is you might think to yourself, well, Jeb, Bitcoin rallied 100% above its previous all-time high. This market in 2019 doesn't seem anything like our current market. It doesn't match the 4-year halving cycle, and in fact, Bitcoin topped out 30% below the previous all-time high when it topped out here in 2019. How could this market, where Bitcoin only managed to rally to $13,700, which, by the way, we called the top on this live on air in 2019. We were doing a charity live stream, actually, and we called the top almost to the minute right here. Why, then, did we top out here? And why is the current market very similar to this market? Well, we're going to unpack that, but I'm going to postulate that it is. All right, so here's why. And we got to bring back up the USC BBS. For any of you who don't know what the USC BBS is, this is a metric that shows us something called the United States Central Bank Balance Sheet. The United States Central Bank is the Federal Reserve. There's nothing federal about the Federal Reserve, and they are not a reserve. They don't actually have reserves. Nevertheless, they do have a balance sheet. How does an entity with no reserves have a balance sheet? That is a good question. Legal counterfeiting. When the Federal Reserve wants to stimulate or slow down the United States economy, they create money out of thin air. Yeah, literally. And the way that they do this is they buy two different assets with fake money that is not real. They buy two different assets and they put them on their balance sheet, which is the chart that you're looking at here in blue. Those two assets that they acquire, generally, there's a few others, but this is generally what they acquire, is they acquire United States Treasuries, which is a which is a treasury note, which issues debt to the United States federal government. And they acquire something called mortgage-backed securities. A mortgage-backed security, otherwise known as an MBS, is a type of investment vehicle where a bunch of mortgages, household mortgages, just like the mortgage that's on your house, are sold, securitized, and put into one package to be sold like a stock, which is why they're called a security, right? It's a mortgage-backed security. It's tradable. And so when you buy these securities, it increases the premium of them, and essentially the issuer of the mortgage-backed security ends up making more money. Well, who issues the mortgage-backed security? A bank who issued the loan on the mortgage issues the mortgage-backed security. And so in actual fact, the way that the Federal Reserve uses quote-unquote reserves and where the quote-unquote federal comes from is that they print money, not through an actual printing press, but they quote-unquote print money in the sense that they buy U.S. Treasuries. In other words, they loan money to the United States federal government, and they buy mortgage-backed securities. In other words, they purchase from banks with money that is not real. And this line represents how much of that purchasing is still outstanding. How much of the purchasing of treasuries and mortgage-backed securities are still in the market. And so this is, as you could imagine, the way that the Federal Reserve actually injects liquidity into the economy. You understand that there is not enough paper money, not even close in existence, to cover all of the outstanding debts and obligations the world over. There is significantly more money that lives in ones and zeros and in bank accounts than is actually in existence in paper. Like, I don't know the number, but it's significantly higher, like orders of magnitude higher. Massively, massively, massively higher. People think that the Treasury is the one that prints money, and technically they do. But it's really actually much more so the Federal Reserve that is injecting massive amounts of liquidity into the economy. Well, this creates a couple of different kinds of cycles. This creates a expansion cycle and a tightening cycle. And I understand this might be a little bit elementary for some of you guys, but I want to make sure that at some point I have created an overall comprehensive explainer of what the USC BBS is, why it's important, why it's literally legal counterfeiting, and also why it impacts the market. Because if you don't understand this, you won't understand why Bitcoin is actually here and not here, and why this is what we're going to see next and not this. You understand? Okay. So USC BBS, we've already established, shows how much outstanding property, I guess you could say, that the Federal Reserve owns that they purchased with money that is not real. At the peak, right here at the beginning of the last bear market, the Federal Reserve had $9 trillion of outstanding assets. These are treasuries and mortgage-backed securities. They began rolling that off to tighten the market because inflation was running hot. At this time, inflation was running almost 10% a year. And you can see why. When you inject trillions of dollars into the economy, that's going to cause massive inflation. And so they thought that they had stabilized the economy post-COVID, and so they began tightening. And you see what we see right here, which is known as a tightening cycle. And I'm going to go ahead and actually outline this in red because it's going to be very important for you to be able to see this. That tightening cycle has just ended as of a week ago today. Okay, and so that is going to be where we get a lot of our similarities here. So I'm going to show the last two tightening cycles and the last expansion cycle, and we're going to see the impacts that this has had on the market. In green here, sorry, not in green, I'm actually going to make this red. These two boxes, which I'm going to turn red, represent monetary constriction. This represents tightening. It represents the balance sheet being rolled off. This is literally cash that is in the global economy being taken out of circulation. This, in history, has corresponded to bear markets. Historically, as far back as you want to go, you end up seeing that expansion of the balance sheet leads to expansion on Bitcoin, which makes sense. If there's more capital flowing into the Bitcoin market, into the global economy, then you would expect that more capital might flow into something like Bitcoin, which is a risk-on asset. And historically, our last two bull markets have corresponded with expansion, monetary expansion. They have also coincided with the effective federal funds rate being low or at least coming down. If we turn off the United States Central Bank balance sheet, you can see our bull market here. In 2012 and 2013 was built on very low interest rates. The next bull market here was actually built on relatively low interest rates. They were going up, but they were low interest rates. They were still sub 1.5. That's this axis right here. This is the effective federal funds rate. So the funds rate was less than 1.5. And we also, if you'll remember, in 2017, we had not so much quantitative easing, but we certainly had no quantitative tightening yet. When quantitative tightening started, we entered into the bear market. And then, of course, we saw the bear market here was built on quantitative tightening. This bear market was built on an end to quantitative easing. In this case, the drain opened up. In this case, the faucet turned off. Does that make sense? Well, we have a bit of a different bull market that we've seen so far. In this case, the drain has been opened up because we have this massively high effective federal funds rate, the highest that we've seen in like a decade. And the faucet has not only been turned off, but like I said, the drain has been opened up on capital going into the global economy because of the quantitative tightening. This entire bull market, in short, is akin to this bear market. But instead of Bitcoin crashing 83%, Bitcoin in the exact same macroeconomic environment, including the law of diminishing returns, Bitcoin has managed to rally 700% in the same macroeconomic environment that led to an 83% one-year-long bear market. That's not remarkable. That's a financial miracle. And so from this, we are able to discern two truths. The first truth is this. This bull market was highly improbable. Much like the Revolutionary War, we are glad that it was won, but it should have never happened logically. It makes no sense that a bunch of 17th century rednecks with muskets were able to defeat the greatest military in the history of mankind. And it also makes no sense that Bitcoin was able to rally 700% in this environment. Sure, we had ETFs come online, and that's a big part of the reason why it happened. But without ETFs, we would probably still be under $70,000. This is the most improbable rally that Bitcoin has ever experienced. The rally from $15,000 to $125,000. At this point in time, a $15,000 movement is negligible. 2.5, 3 years ago, $15,000 was the entire price of Bitcoin. And so you start to understand why I say right now is not necessarily the same in every single sense as the end of the last bear market. Instead, it was actually very similar to the 2019 movement. You see, the end of the last bull market, moving into the last bear market, was the end of quantitative easing and the beginning of quantitative tightening. Right now, we're looking at an end to quantitative tightening and a potential beginning of quantitative easing within the next 2 months. Now, it probably won't be as rapid as the last bout of quantitative easing, so we might have slightly reduced impacts on the market from the quantitative easing, since we're likely not going to see $3 trillion flood into the global economy all at once. So it's probably not going to be the same. It's probably not going to feel the exact same as what we saw here, where Bitcoin rallied 1,400% in less than a year. Don't think that's going to happen. But what I do believe is that we're looking at something very similar to here with the 4-year halving cycle characteristics of here. So what I believe is about to happen is going to be a mashup of what happened right here in 2019 and what happened at the beginning of the 4-year halving cycle. We're probably going to build a very similar, and this is where we start actually getting into analysis. We finished laying the foundation. Now we're going to build on it. We're probably going to build a very similar 4-year halving cycle market dynamic as we built in the last bear market, but we're probably going to see that conclude in a very similar way that the 2019 non-all-time high rally concluded. By the way, one last thing I want to mention. I've already said this once, but I want to say it again. The last time we saw Bitcoin do this, rally during quantitative tightening moving into the end of QT, we only managed to rally. We only managed to rally, about 60% of the way back to all-time high. In the same environment this time, we've doubled to all-time high. You see the difference there, right? I mean, I really hope you understand. The exact same environment that sent Bitcoin from 3,000 to 13,000 and didn't hit 20K, that exact same environment blasted Bitcoin straight through 69,000 up to almost 127,000. That is just about a doubling of the previous all-time high in the exact same macroeconomic environment, which is extremely powerful in Bitcoin, one of the biggest drivers of Bitcoin's price. And the last time we did that, we didn't even come close to all-time high. We got to less than 14K and all-time high was at 20. So if this, I mean, think back to like, I don't know, second grade. If this, then that, then this, then that, right? You know what I mean? If this rally is akin to the 2019 rally, and it is significantly larger, then when does this happen? Because if this is phase one and this is phase two, and this is phase one, then oh my goodness, if phase one is like 4 times bigger than this phase one, is phase two going to be 4 times bigger than this phase two? Probably not, because we're not going to see, most likely anyway, $3 trillion of liquidity pumped into the market overnight. But what we are most likely going to see is, instead of where Bitcoin had a really wimpy first rally and a massive second leg, we're probably going to see a second leg that's at least as big as the first leg, pushing us up significantly higher. And so with all this said, I'm going to go into a different chart now so that we can get some clean technical analysis here. You now see the background differences and similarities between today and 2019. And so now what we're going to do is we're going to do some actual technical analysis on the current price action of Bitcoin so that we can get an understanding of where Bitcoin is going, with that understanding that Bitcoin will probably follow similar market structure that we followed in 2022, but we have the similar backing from the global economy, the similar macroeconomic environment background that we did in 2019. And so with that in mind, let's do some TA. All right. Bitcoin on the short term is painting a very, very negative November. November was terrible for the bulls. I don't mind it. I think it was great. I love buying Bitcoin below 100K. Love doing it. It's so much fun. But it was very bad for the bulls. And it reminds me very much of this dump right here, with this giant crash, and then Bitcoin still went higher. I don't know that we're going to rally back to 126. If we do, I think if we do that too soon, I think a lot of people are going to sell, and then you'll fall back over into a double top bear market. But what I do think is going to happen is I think that Bitcoin is going to follow a very similar structure that we followed here. Except I think that the second leg might not be as large, because I think we're in a very similar macroeconomic environment as we were here. You see, technical analysis, we are comparing current markets to previous markets, but it's very important to understand that no two markets are the same. So what we need to do sometimes is we need to compare things like, okay, well, I think we'll repeat this market structure, but we have this background, but we have this we have this public sentiment. And so we don't just look in the history and say it's going to perform exactly like this. No, we're going to say it's going to perform a little bit like this because this is what happened then. But on the other hand, we're going to perform a little bit like this because this is what was happening on that hand. And we start saying markets don't repeat, but they often rhyme. But we need to understand there's 5, 10, 20, 50 different ways that they might rhyme. Right? There's different parts of the prediction that we're going to compare to different parts of the past. I think we'll probably follow similar market structure of basically this is essentially just one big bear flag like we did in 2022, but we're also probably going to follow a slower, shallower correction than we did in 2024 because macroeconomic environments look a lot more like they did here than they did here. Right? We also had the war in Ukraine starting over here, which is something that you need to consider. War in Ukraine was beginning at this point in time. We're not seeing that happen right now. Now, I mean, that could change if we went into like a full-scale war with Venezuela or something, then that would definitely be very bearish for markets. But, you know, without some kind of massive black swan event, naturally, if we don't know about a black swan, we don't know about it, so we can't factor that in because we don't know if it's going to happen or not. All right, now down on the short term, let's kind of break out some Fibonacci's and break down what we're doing. Bitcoin has seen a nice little rally. The concern is it's really looking like a dead cat bounce, and just like we saw in 2022, it is looking a little bit like a bear flag. We did manage to rally up to roughly the 0.382 here, but actually this isn't the Fibonacci that we need to worry about. I'm just showing it to you because you might be looking at it. The Fibonacci that we really need to look at is this one. If we look at the Fibonacci retracement on the linear chart, not the regular, the linear chart, what you're going to see is that Bitcoin originally fell back down to $94,000, tried to break above it and rejected. Down on the hourly chart, if you'll recall, I flipped on this very moment right here, right there on that little dot. That moment is the exact moment that I said that Bitcoin is going into a bear market because that was my boundary. That was my line in the sand. If Bitcoin cannot hold above $94,000, then we are in a bear market until proven otherwise. Ever since I made that call, Bitcoin has only been above the price that it was at when I said that for a grand total of about an hour. And that was last Wednesday, and we were not there for long. It's very interesting to me that as Bitcoin rallied back up here to $94,000 again, we rejected off of it. I am encouraged that we're getting these higher lows, but ultimately what we need to see happen now is we need to see whether or not Bitcoin is going to be able to follow this curve back up to 94,000 and break through 94K. If it can't, then that's where a falling over of the market could send Bitcoin significantly lower. So that's kind of the framing, right? We did the long-term framing, comparing our current market to previous markets. We're doing the shorter-term framing because, as you know, one of our principles with technical analysis, we want to kind of come in and in and in and in and in, and every time we zoom in, we want to get information along the way. We don't want to just look at the 1-minute chart in a vacuum. We don't want to just look at the hourly chart, which is what we're doing right now, in a vacuum. We need to understand what happened 10 years ago. We need to understand what's happened, and that's our width, right? We need to understand the depth of this is what was happening behind the scenes, right? So that we can fully appreciate the full picture on Bitcoin. So we understand the width, we understand the distant past, what's happened in Bitcoin. We understand the depth. We understand what was happening in macroeconomic environments at that point in time. And now we can use that to understand the minutia, which is where we are right now. And so that's why you have to take a comprehensive look at analysis. I don't like it when people say, I'm a technical analyst, I'm a fundamental analyst, and I'm not the other. A proper technical analyst is not glued to the word technical. And a proper fundamental analyst is not glued to the word fundamental. They're glued to the word analyst. In English, the first word modifies the second one, not the other way around. We're not an analyst technical. We're not an analyst fundamental. We're a technical analyst. The same way financial sovereignty is not about finances, it is about sovereignty. We have to take the market, we have to look at the market from a holistic standpoint. We have to look at the full past and the full depth, the full history of the price action and the full depth of what was going on that explains that price action. There are plenty of people that'll say all you need is charts, and there are plenty of people that'll say all you need is fundamentals. You can do very well with one or the other and not both, but you will not do as well as you could unless you use both. So with all that in mind, let's talk about what I think is going to happen on Bitcoin here. Now, actually a little bit more depth. Here's some depth. Over here, people were worried that Strategy was about to sell Bitcoin. That's pretty funny. I really did not think they were going to do that. I was very clear that I do not think the Strategy is going to sell Bitcoin. And we had an announcement this morning that Strategy has acquired 10,624 Bitcoin for $962.7 million at $90,615 per Bitcoin. And they now hold 660,624 Bitcoin, officially reaching 3% of total supply that will ever be created. That is remarkable. They have spent almost $50 billion acquiring Bitcoin for an average price of $75,000. Could they have had a lower average entry? Sure. Will it matter in 10 years when Bitcoin's trading 1.5 million? No, it won't matter at all. This is the largest investment in Bitcoin in the history of mankind. So all of that kind of explains to us why we saw this dump. But it's very interesting because what you saw a couple of days later is that Strategy announced a $1.44 billion cash reserve for dividends. Fong Li came out and said that the reason that they created that was, I'm going to paraphrase you, but essentially the reason that they did that was to shut up the bears. Like, no, we can raise cash. We can raise cash, and they did. Right? And so Bitcoin started to rally again. And it's also very interesting because right around this time, Vanguard came out and said that they are going to allow clients to custody Bitcoin ETFs, which is something that they had previously not done. You could custody Bitcoin ETFs on Fidelity, Robinhood, TD Ameritrade, Schwab, and who am I forgetting? I'm forgetting one of the big guys. I said Fidelity. Anyway, you could custody them basically everywhere, except Vanguard. Well, that's what I'm forgetting is Vanguard, obviously. Duh. Vanguard would not allow you to custody Bitcoin ETFs because they did not think that they were a good investment. Well, right after this dump, Bank of America started recommending up to 4% Bitcoin exposure to their clients, which is like, I've been in Bitcoin since it was at $3,000. That sentence I just said was if I had a time machine and I went back in time and I posted that headline and said, I have absolute proof that in 8 years, Bank of America, $500 billion in assets under management, probably significantly more than that, is going to say that clients should hold 4% of their portfolio in Bitcoin. Bitcoin would instantly shoot from $3,000 to $15,000. Instantly. Instantly. If we knew 8 years ago that BOA was going to say that, that is some asymmetric information. But you have access to that asymmetric information because the price hasn't moved since they said it. So we originally crashed. Right at the bottom, Vanguard comes out and says, actually, we'll let our clients custody Bitcoin. And then Bank of America says you should hold 4% of your portfolio in Bitcoin. And this is supposed to be a bear market that's going to drop us 77%. This is where our historical analysis is. This is where the work that we did to frame the conversation comes into play. So you're telling me that the fundamentals look like this. QT is coming to an end. Quantitative easing is coming online. The banks are adopting Bitcoin at a record rate. The federal government is likely going to be adopting Bitcoin in a major way next year. And you think we're going to see a 77% drop? Nonsense. The only drop that we're going to see is one that institutions are going to manipulate to happen so that they can acquire and get low entries the same way Strategy did. If you see Bitcoin going down to $60,000 or $75,000, I'm going to tell you that there is one reason, and it is not because Bitcoin is not strong. It is because institutions, banks, and yes, even governments have manipulated the news to drive Bitcoin to that level using long liquidations to get the sell side pressure that they need so that they can get the entries that they want so that in 10 years they wake up on a 15x and they get the greatest investment in the history of their entire career. Because after Strategy did what they did, everybody wants to replicate it. That's why. And so you cannot look at this chart while stripping away that truth. That's what's happening. And that's what's going to continue to happen because Bitcoin is the most asymmetric investment that we have seen this century. It's that simple. And so all of that gives us some explanation about what Bitcoin's going to do soon. You saw Strategy come in and acquire 10,000 Bitcoin. The FUD is dead. Dead. D-E-D, dead. Strategy's raised $2.5 billion, $2.3 billion in 2 weeks for a dividend fund and to hold Bitcoin. The FUDsters are dead. Strategy is sitting right at 1M NAV. The investors are going to dogpile in here. By the way, the abandoned baby candle that you guys have heard about. Heard about that? There's a certain kind of candlestick. It shows up right here. This is the first time in my entire career that I've actually ever seen this thing in the wild. This is I think it's called an abandoned baby candle. I think that's it. It's a very, very, very rare candle. And it looks a little bit like this. A bullish abandoned baby. It's where you have a candlestick that shows up and it has absolutely no connection whatsoever to the candlesticks on either side of it. This typically shows up in about 1 in 10,000 candlesticks, and it is the first time in recorded history that I can find anywhere that it has ever happened on the MicroStrategy chart. There was a candlestick that almost met the criteria here, but this upper wick invalidated it, and MicroStrategy would go on to rally 70% in the next 20 days. We're likely about to see a pretty large rally on MicroStrategy as it drops back down here to 1M NAV. Everybody shorting Strategy when it was at 3M NAV, that was an excellent trade. Shorting Strategy now is stupid because unless you think Strategy is going to zero, you are going to lose money because it is almost certainly at the bottom. Again, if you think Strategy is going to implode on itself, fine, short it. I don't think that's going to happen. They are showing ridiculous strength and telling the bears to shut up by investing $2.3 billion into the cash fund and also into Bitcoin. This is becoming a pretty great entry on Strategy. Now, I don't hold much Strategy. I hold like 1% of what I have in Bitcoin is in Strategy. I'm not a big investor in Strategy myself. I'd rather hold Bitcoin spot. And I'm not saying you have to go and invest in Strategy. It is basically leverage Bitcoin. If you want to do the same thing, just leverage your Bitcoin on like 1.5x and you can achieve about the same thing. But there are a lot of institutional players that would rather buy Strategy than the actual Bitcoin because they want exposure to Bitcoin without buying the ETF, and they want exposure to Bitcoin without buying spot because they don't want to have the custody nightmare. And so what do? They buy Strategy. And so I think you're about to see a huge rally here on Strategy, and I think that's also going to lead to a major rally on Bitcoin. And I do think that at some point in the next couple of weeks, you're going to see that dead cat bounce up towards 100,000. I know that people are giving me a lot of flack for that, saying, Jeb, where's that bounce you're talking about? Huh? Where's Bitcoin? I thought it was going up to 100K. I really do think that's going to happen at some point pretty soon. If Bitcoin does reject here, and it rejects at 94, that is very bearish. And that does mean $75,000 is in our targets. Right? If we manage to drop and start making lower lows here, then that does mean that that we're probably about to see a major correction. But what you're seeing here is that we're making rapid higher lows, and the higher highs have slowed down a little bit. But essentially, this tells us that if we have a trend line like this, right? if we have a trend line like this as our resistance, and then we have this almost parabolic curve as our support, this gives us an idea that there is some level of strength that we have not seen before. Now, we do have to be careful because we saw the exact same thing happen over here, and Bitcoin just absolutely capitulated. So I'm not going to tell you with a great deal of confidence just yet whether or not we're going to have this massive rally back up here, or if we're going to fall over. But what I will say is that it makes the most sense that Bitcoin would at least rally back up to $100,000 to tag that 50 weekly moving average. And so that's the direction that we're going to lean in until proven otherwise. We're also going to, however, lean in the direction that $100,000 will hold and that Bitcoin is actually not going to break through it until proven otherwise as well. We have every reason to believe from the short and long-term technical analysis, therefore, that Bitcoin is going to rally back up to the 50, but not necessarily break it. And so you've spent the last 40 minutes listening to me yap so that you could hear me say that sentence. I just want to make sure you understand that that's the point. That's the point of all of this. All of the analysis that we just did, it all comes down to this. We have every reason to believe that Bitcoin is going to rally back up to $100,000. But then we also have reason to believe that we're not going to break through it and will actually probably fall over. Once we get there, we're going to have a lot more information about what's going to happen. As you guys know, MSCI's decision is coming up January 15th. You also will know that the effective federal funds rate decision is coming up in just the next couple of days. That decision is going to be incredibly important this Wednesday. If we see a rate cut, which we are now forecasted to see, that could be the catalyst that we need to rally back up to $100,000. Or we could see Bitcoin fall over. The last time we saw a rate decision, we saw a major crash on Bitcoin. If you remember, the last rate decision was, let's see, historical. The last rate decision was, I think it was November 19th, wasn't it? Somebody fact check me on that. No, it was the 29th of October. That's it. Yeah, the 29th of October. So the last time we saw a rate decision on the 29th of October was right here. Crash. So moving into this rate decision, it would not necessarily be the greatest idea to just go into a crazy long right now. We're in a bear market. Bear market setups are working. Bear flag. Bear flag. Bear flag. But it does make sense to me that Bitcoin would at least try to rally back up to 94, maybe up to 100. And then, unfortunately, I hate to say it, probably fall over because Bitcoin, as I said, does have that 4-year halving cycle bear market confirmation. So what's going to happen in 2026 is going to heavily be influenced by rate decisions. It's going to be heavily influenced by MSCI's decision. If you're not familiar, MSCI is they are the company on Wall Street that they are the provider of financial market indices, right? So they help create market indexes. And so they decide who gets to be in what index. And if they decide that strategy acts like a fund and not like a company, which honestly strategy does kind of act like a fund. They're a company, they do kind of act like a fund, so it's kind of debatable. If they decide that they act like a fund and exclude them from indices, then that means that strategy is going to lose a significant amount of inflows. And that FUD is a big part of what's suppressing the price. So we need to keep an eye on that. But at the end of the day, what makes most sense right now is a rally back up towards 100,000 and then that critical decision point about what is going to happen in the year of 2026. That decision will probably be made within the next 45 days. Within the next 45 days, I believe that I'm going to be able to tell you with a great deal of confidence what 2026 is going to look like. And I'm looking forward to do so. Hey guys, if you haven't already, we are coming into the end of the year and you need to make sure that you take advantage of this deal. This is a really important one. iTrust Capital is the best place to invest in Bitcoin with retirement accounts. And the reason that you should use iTrust Capital to invest in Bitcoin is because you can actually self-custody spot Bitcoin. We're not talking about ETFs. We're talking about spot custody of Bitcoin in a retirement account. If you guys don't know, one of the biggest sinks on your net worth are taxes, right? You spend an exorbitant amount of money every single year on taxes. And so we want to use every tax strategy available to reduce our tax burden. And one of the best ones in existence are IRAs and 401ks. A traditional IRA allows you to deduct the full investment from your taxes, which is incredible because that's the top bracket, right? Many of you guys, you'll be saving 24% on taxes if you deduct $7,000 out of that top bracket. Very important deduction to get every single year. iTrust Capital is the best place to do that. On top of that, you can roll over IRAs and you can roll over 401ks that might be invested in the stock market while they're at all-time highs to buy Bitcoin while it's down 30%. So make sure to go to itrustcapital.com/go/crypto-jeb. That link is in the description box down below. And sign up for iTrust Capital, because when you do, you'll be getting access to a phenomenal platform to buy Bitcoin in a tax-advantaged account, something that you should absolutely make sure that you max out every single year. Make sure you sign up and fund your account, and you will be getting a special $100 funding bonus when you sign up. Links are in the description box down below. All right, let's read some chat. Let's read some chat. Let's read some chat. Bardazon, BTC is due to die. It cannot fulfill its purpose without breaking the 21 million hard cap. Bitcoin's white paper says a P2P electronic cash system, not a store of value for governments and institutions. So, what are the definitions of money? I love it when people say this. I love it when people say this. Do I like the centralized hoarding of Bitcoin by major institutions? Not necessarily. I want as much of it to stay in the hands of the people as possible, but that's not something that you can stop. You can stop the double spend problem. You can decentralize it. You can even stop. You can even be permissionless where a government can't stop you, but you can't really stop the Pareto principle from kicking in and allowing people that are very, very intelligent with money and have the ability to manipulate markets from acquiring most of it. You just can't stop that. If you come to the Bitcoin white paper and you type in P2P, well, let's type in cash and see if it shows up. You can see a purely peer-to-peer version of electronic cash, right? The white paper talks about it. In fact, the word cash is used 6 times. Let's look at every single time that the Bitcoin white paper uses the word cash. Bitcoin, a peer-to-peer electronic cash system. A purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. This is the first sentence of the Bitcoin white paper. A purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. This says nothing about how many payments would take place. This says nothing about the volume of transactions that should be allowed to be done. And this says nothing about how valuable those transactions can be. Talk about hash cash. That's not really relevant. And then hash cash. So that's basically the skinny of where the word cash comes in. Electronic cash. So what is cash? Well, cash is money. So I'll just read you a definition of money, and then I'm going to tell you some of the characteristics of money. Money, a current form of exchange in the form of coins and banknotes collectively. All right, so that's a definition. But what are the properties of money? What are the properties of cash? These are basically the same word. Cash and money have to have meet 3 major criteria, or ideally meet 3 major criteria. First and foremost, they must be a unit of account. In other words, you can say, I have $74,528.52. You're not just saying, I have this pile of money over here. You can denominate it. You can divide it, and you can measure it as a unit of account. You can use it in accounting. You can say, I have this much money, use this much money to pay for this many goods. You have to be able to use it mathematically. It has to be divisible, so you can use it mathematically. Bitcoin meets that in its current form. Let's not talk about Bitcoin as it was created. Let's talk about Bitcoin as it currently stands. The second principle of money is that it should be used as a medium of exchange, which is exactly what the white paper says. The Bitcoin white paper says that Bitcoin is a purely peer-to-peer version of electronic cash, which would allow online payments. So this is talking about a medium of exchange. It even says it even explains the way in which we should be able to do the exchange with Bitcoin without going through a financial institution. That's one of the principled approaches that was used to designing Bitcoin. Is it has the ability to transact without a financial institution. This is where the principle of decentralization comes in. So Bitcoin, not in its original form, but in its current form, meets that. It is a unit of account, and it is a medium of exchange. You can transfer, you can transact with it. You can buy our courses. You can buy financial coaching from us. You can do all kinds of stuff with us and with a bunch of other companies and a bunch of other people with Bitcoin. Okay, now we get to the third principle of money, and that is a store of value. Cash, money, should be a store of value. You should not only be able to store your money divisibly and transact with it, you should be able to store it over time. The best money in the world is a money that does not lose value over time to inflation. A better money is a kind of money that actually generally goes up in value. Those are the three principles of money. Bitcoin in its current form meets all three of these. The criticism that people like Bardazon level at Bitcoin is that it does not have the transactional throughput to actually meet the colloquial term cash. Typically, when people say the word cash, they are talking about money, but they're talking about a subset of money that is easy to do payments with, right? I mean, we have it down here. Commerce on the internet has come to rely almost exclusively on financial institutions, serving as trusted third parties to process electronic payments. So the criticism is fair, and that is that Bitcoin does not, in its current capabilities, it is not very much able to process millions of transactions per day in the way that quote unquote cash would, where you have an almost infinite unlimited scalability in how many transactions you can process with something like paper cash, right? This is an issue, but it doesn't mean that Bitcoin doesn't meet the definition of money. And it also doesn't mean that you can't pay for things in Bitcoin. Bitcoin has been around for 16 years. And people pay for things in Bitcoin every single freaking day. Why does it mean that Bitcoin is not usable as cash, and that it's not and that it's not money, and that it's not fulfilling its original purpose, just because it's widespread and well adopted? That makes no sense. Is it an issue that at peak times you have to pay $30 for a transaction fee? Yes. Is that normally what's going on Bitcoin? No. It's extremely rare that transaction fees are that high. They've been that high a couple of times in past, like during 2017. Nevertheless, it is an inherent weakness of Bitcoin is its inability to process millions of transactions. This is where layer 2 solutions like Lightning Network come on, where you have all the transactions take place off-chain, and then every once in a while they settle on-chain. There's nothing wrong with that idea. In fact, it's a very important idea, the idea of layer 2 scalability on Bitcoin. Why? The reason, very simply, is that it allows Bitcoin to continue doing exactly what it does best, which is secure value in a long-term distant future while being a strong store of value, being a unit of account, and being a medium of exchange, but it also allows the scalability. The scalability on Bitcoin being off-chain makes a lot of sense. Well, Jeb, what about the institutions? What about them? You can make the institutions that do the layer 2 scaling, you can make them decentralized as well, and you can also not use them. You can just pay the fee. The biggest criticism that anybody can come up with Bitcoin is that the transaction fees are a little bit high. That works in both ways. Sure, it's harder to pay for a cup of coffee, but it's way easier to buy a $15 million villa in Milan. You don't have to spend 6 months trying to get money across borders. You can send it and it's there in 20 minutes. And by the way, it's not a scaling percent fee, it's a flat fee. That is incredible. That is absolutely remarkable. And so I'm glad you brought that up. And no, that issue on Bitcoin is not a big enough issue that we should throw Bitcoin out. It is not a big enough issue that you should throw Bitcoin out. It is not a big enough issue where you should throw Bitcoin out and create a new coin. And the reason that we know that is not a big enough issue that you should create a new coin is that there are 7 million coins on CoinMarketCap and not one of them has ever come anywhere near recreating Bitcoin. And none of them ever will. Risk your life savings in Bitcoin copycats and put your own life savings at risk. I'm not doing it. 1% allocation, 2% allocation to different coins here and there. Sure. Maybe they outpace Bitcoin for a few years. Sure. Could CASHBACK outpace Bitcoin for a while? Could another coin outpace Bitcoin for a while? Sure. Is it a good idea to bet against the big dog? No, it's not. It's not. It's a bad idea. And so for those of you that own only CASHBACK and no Bitcoin, I am going to tell you straight up, you will make money at times. You will beat Bitcoin at times. I think CASHBACK is awesome. I love CASHBACK. But those of you that say, I'm only going to hold CASHBACK, I'm not going to hold Bitcoin, I think are making a serious mistake. I think you're making a very big mistake. I don't think it's a mistake to hold CASHBACK, mind you, because CASHBACK during altcoin seasons will outperform Bitcoin. It will. It will. It has. It will outperform Bitcoin. You can trade CASHBACK and make a lot of money. If you do not hold Bitcoin and you only hold CASHBACK, you are going against every single person that understands anything about money in the modern world. Because even TradFi has gotten on the boat with Bitcoin. Can CASHBACK do well? Yes. Will CASHBACK ever flip Bitcoin? Read my lips. No, it will not. CASHBACK will never be larger than Bitcoin. CASHBACK will never have a larger market cap than Bitcoin. It won't. It will never happen. The only reason that it would ever happen is if quantum computing took out Bitcoin and CASPA managed to be resistant to it. That's the only way. It's the only way. That is the only way. All right, let's read a little bit more chat. All right. Let's read a little bit of chat. Really appreciate you guys being here. Really appreciate you guys being here. All right, guys. Hey, by the way, there's a big Cyber Monday sale that's still kind of lingering on NordVPN. If you guys haven't already, make sure that you go ahead and sign up for NordVPN with the link in the description box down below, or by going to nordvpn.com/Jeb. There is an exclusive deal right now where you can get access to NordVPN plus 4 months extra using our exclusive deal. And you're going to be able to get 28 months of NordVPN for only $105. And not only are you going to get access to NordVPN with a Plus plan for 28 months, that's 2 years plus 4 months, you're also going to be getting access to the anti-malware and browsing protection, the add-in tracker blocker, and the password manager and breach scanner. This is phenomenal. And you're absolutely going to want to get it because this is going to help keep you safe as part of the Threat Protection Pro platform and also as a part of the password management platform. This is extremely important because NordVPN will tell you if your passwords or credit card details have appeared in data breaches and send you recommendations on how to take action. Literally, NordVPN will tell you if your passwords have been exposed so that you can reset them before a hacker gets around to hacking you, or just simply by logging in with your password. All of that for $105. And that's not even the VPN. That's just an add-on, right? You get the anti-malware package. This is going to scan files that you download for malware, removing those that are dangerous, and checks your apps for security weaknesses. You're going to get the advanced browsing protection, stops you from visiting fraudulent websites that host malware, conducting phishing attacks, that helps you avoid various scams. By the way, this is something that you should really consider getting for people that are elderly, that are, maybe not as familiar with the internet. They might not know, oh my gosh, that's an obvious phishing attack. Oh my gosh, I shouldn't go to that link. This is something that you could gift someone for Christmas. You can say, hey, Mom, hey, Grandpa, I'm going to get you NordVPN, and I'm going to set it all up for you. I'm going to show you how it works so that you don't, have somebody come in and drain your retirement. I mean, I don't know. Just there's all kinds of ways that hackers and thieves can attack you. So NordVPN is going to help keep you safe when you use all of these things. So make sure that if you have not already, sign up for NordVPN with the link in the description box down below. Keep your information private and secure. Very, very, very important. All right. Jeb, hope your wife is doing better and you find out what the issue is. That is what I am definitely hoping for. I think it's going to happen soon. God's been very good to us, and we will find out. And I will not rest until I have. All right. What about VPNs that can be found as browsing extensions? NordVPN is a browsing extension, and there is a reason it's the biggest, most well-adopted VPN in history. That is because it is the best. We were at the hospital getting my wife's chest CT, and I looked up at the television, and it was a NordVPN ad. I was like, hey, I work with them. It's kind of cool. The guy was like floating around in a bubble because he was protected, All right, guys. Hey, last thing I want to tell you before we go, make sure you check out Stamp Seed. Stamp your seed into titanium. If your house burns down, you don't want to lose your Bitcoin. You already lost your house. Don't go through that. Get yourself your very own pawn hammer. Boom! Ban hammer. Gone, haters. Boom! We get the ban hammer. We ban hammer them, right? You take the hammer. You take the stamp. You stamp your seeds. This is just a blank that I have for marketing purposes. You stamp your seeds. Boom! Right there into the titanium. This thing can withstand, because it's titanium, up to 3,000 degrees Fahrenheit. House fires don't get that hot, which means your seeds are safe, even if your house burns down. I mean, come on. That's pretty straightforward. Purchase Stamp Seed products. Links in the description. Stampseed.com. Boom. All right. I'm going to wrap it out here. Go shoot the video. Really appreciate all of you for being here. It's always fun spending this time with you guys. Yeah. Be praying for us. We're doing everything that we can to get my wife feeling better. Obviously, she's kind of scary, not knowing what's going on for both of us. But God's good. And we have some answers now. We're working on getting some more. And see if I can extract a lesson out of this. You do not know the strength of a metal, such as this titanium, until it's been put through the fire. You also don't know the strength of your marriage or your faith in Christ until you've been put through the fire. And so my encouragement to all of you is the same encouragement that I give myself in the mirror and the same encouragement I give my wife. And that is that when hardships come, our response, as difficult as it is, needs to be one of seeing the hardship as an opportunity to strengthen our faith. When you are doing an exercise, like bench press, let's say you do 10 reps, and on the 10th rep, you absolutely give it absolutely everything you have. The first 8 reps did nothing. They literally did nothing. They did virtually nothing for your strength. It's those last couple of reps where you're right at your breaking point that really show what you're made of. And so when you find yourself in that season of life where you are at your breaking point, you're beyond your breaking point, and you know dang well that you cannot do this. Those are the exact moments that you find out what you're made of. And so if you, like our family, are at that point right now, I encourage you to see it as a blessing. As strange as that might sound, I consider you to see it as a blessing. Jeb, how dare you tell me that my trials are a blessing? James chapter 1. James, a servant of God and of the Lord Jesus Christ, to the 12 tribes which are scattered abroad, greetings. My brethren, count it all joy when you fall into divers temptations, knowing this, that the trying of your faith worketh patience, but let patience have her perfect work, that ye may be perfect and entire, wanting nothing. If any of you lack wisdom, let him ask of God, that giveth to all men liberally, and upbraideth not, and it shall be given him. But lest him ask in faith, nothing wavering, for he that wavereth is like the wave of the sea, driven with the wind and tossed. Let not that man think he shall receive anything of the Lord. When you're going through a trial, when you're going through a tribulation, not all of them are from God. In fact, a lot of them aren't. But all of them are an opportunity for you to learn to be more godly, which is why they're allowed to exist in the first place. To teach you and to teach me how to have more faith in Christ. I'll end with this. 3 days after my son passed away from a cardiac abnormality that went unnoticed, because who does cardiac imaging on a 7-month-old? When was the last time you ever heard of that being done? 3 days after he passed, I walked out into my driveway, my front yard, and I looked up to heaven and I said, God, you are just as true as you always have been. You're just as good as you've always have been. I love you just as much as I always have. And now that I've been through the hardest thing that I will ever go through in my entire life, I know that I always will. That doesn't mean that I haven't had my fair share of hardships. I'm not some Superman, and I'm also not apathetic. Spent a lot of time crying. A lot of time. And that's okay. But when I tell you that the trying of your faith worketh patience, I mean it. And so if we do go into a bear market, or if things do get bad, or if things do get hard, I beg you, see it as an opportunity to grow. Not as an opportunity to do what children do best, which is complain. Grow up and see it as a blessed opportunity to find a better version of yourself. Thank you very much for being here. If you guys did enjoy today's video, make sure to hit that like button and subscribe to the channel. And before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.